one of the only headwinds is this idea we have to go into a bear market in 2026. If you're looking at through the 4-year lens, then a lot of people are thinking, okay, we're running out of time. It has to happen now. And that's what caused a lot of this leverage. There's a percentage of people that still believe in the 4-year cycle. Now, if the price doesn't collapse, you could see those people FOMOing back in. That's actually becomes a tailwind for Bitcoin. And then at that point, all bets are off because we're in uncharted territory. The number of people believe in the 4-year cycle is actually continually going down. It is only 3 data points, especially when there's a phase shift in Bitcoin itself. And I think we've gone through that. I really do. We could be literally just staircase up for the next multiple years, even if we don't have a crazy euphoric blow off top, right? Like say we just stay between 110 and 130. That's actually super bullish in my opinion, because
Archie.
If you have a look at the Bitcoin chart right now, it hardly looks like a blip. Like in percentage terms, the dip wasn't all that much. It was barely, 15%? It came down from about 120 something. Yeah, that looks like nothing at all. Like it doesn't even look like anything compared to earlier in the year, right? So we had, but for a single day that precipitated a liquidation cascade. 19 billion is the record for the ecosystem. And so, I'm not sure we've had anything approaching that, but maybe in percentage terms as a percentage of the asset class.
Oh yeah, percentage-wise, I think we've had some pretty big drops. And it's also the wick too, like again, and how do you base it on? Because every exchange is so different. But this is daily closes here. And this chart is super simple, right? It's just moving averages. But I thought this was an interesting pattern that's played out. And yeah, I'm not saying this is going to continue. It's only a few data points, but it's been an interesting pattern since the lows, since we put in the bear market lows. Because, so the red band, for everyone that's watching, the red band is a 200-day moving average. The orange band is 365-day moving average. And the interesting pattern I noticed is we've actually kind of consolidated and found the bottom between these two bands essentially 3 times so far over the last 2.5 so years. We've gone below the 200-day, but we have never gone below the 365. The 365 today just crossed 100,000. So the 1-year moving average, the 365-day moving average is now at $100,000, and that is a result of us trading consistently over 100K now for a while. And so that's pretty significant because you can see we bounced off the 365-day moving average, or pretty close to it, basically four times, you could say, twice in the one dip there. But you can see the consolidation and the time to kind of get in before the next move up was between these lines. Now, I'm not saying we have to go between these lines again, of course. I would not want to see us go below the 365-day moving average. I don't think in any bull market we've really gone below it. In the 2017 bull run, it was so euphoric we didn't really go below the 200-day moving average. But this kind of range here is between 107 and 100. So the 200-day moving average is at 107. The 365 is at 100. So it's just a level to watch for. We could potentially revisit that. These numbers are climbing quickly, though. These moving averages are climbing quickly. So depending on if we get there and when we get there, it could be a lot higher. The other thing, last thing I'll say is, if we go euphoric phase of the bull run, which I still think hasn't fully come, we probably won't go. In that case, we probably won't go back between these lines again. We'll probably stay well above the 200-day moving average at that point. So, but yeah, any thoughts on this kind of?
Yeah, just to put that in a bit of context. How much progress Bitcoin has made in a year. This time last year, 100K was almost a bit of a meme. And then, we were all sort of goading Saylor into holding a 100K party at his place on New Year's Eve. And he fell for it. and so, and then something special and spectacular happened in November where Saylor's company strategy just unlocked something in capital markets and it went absolutely crazy in the fixed income markets. And suddenly they were getting access to billions of dollars of Bitcoin every other week to buy. And you can see that massive spike just before January, and that was the November-December period. And we hit 100,000, but it was a precarious sort. It was more like a tap, and then it dipped back underneath, and people were making fun of everybody who went to Saylor's party, celebrating too early, top signal, everything like that. And you know what? For the first 3 months, a lot of people thought they were right. because it dipped all the way into the 70s from 100,000 down to the 70s. That's a 30% dip, right?
Can you see my cursor? Or?
Yeah, we can
this one.
see that. Yep.
Yeah, that was a big drop actually from up here to way down there. Yeah.
Yeah. And so, that really puts into perspective where we are now with this. I know the $19 billion liquidation is a huge figure, but it really puts into context what's actually happened this week. And when you look at the chart, you zoom out to a 3-year, since the bottom of the bear market, you zoom out and it just shows you that actually this is just pretty normal behavior with Bitcoin. 15, 20%, 30% drawdowns, that's just standard. If you don't have money patient enough to see through a 30% drawdown, you need to get your affairs in order, because that's just a standard short-term drawdown. It's absolutely nothing.
You have to be able to stomach that volatility. Otherwise, you can't be in Bitcoin if you can't stomach that. And whatever you need to do to stomach that, if you're new, that's just part of it. And in the past, when people, past cycles, it was way more. But yeah, anywhere between 10 to 30%. I mean, that's just so standard during a bull run. And that's what allows the cycle to extend in a healthy way. As long as you consolidate after that, get support, and then you kind of grind back up, stay above key moving levels. We're still above the 200-day moving average. Like, it's at 107. We're above it right now. I know we're not above it by that much, but we're still above the 200-day moving average. And nothing on that chart looks like it's broken.
And the other thing is, I just posted earlier today, or it was yesterday, Bitcoin officially 158 consecutive days closing the daily candle above 100,000. Right, that was the point that I was going to make.
Yeah.
In giving that context where we were on New Year's Eve with a sort of precarious Bitcoin price in the 90s, and then the dip down to the 70s, and now we've had 158 consecutive days closing above 100,000. Right, that's incredibly bullish. Whatever it does from here, to me it just looks like just a short-term dip. We see demand on the horizon building. So, yeah, I'm not at all worried. I don't see anything worrying in the Bitcoin price right now.
Yeah, and it's been there's been multiple storylines kind of during this bull run, and what's interesting to me, couple different things. So, I think it depends on the lens you're looking at Bitcoin through. So, if somebody is really focused on the 4-year lens now. I'm kind of agnostic on the cycle length. I personally don't really. I'm not actually using it as a timing metric. I understand that we have a couple cycles where Bitcoin has followed very consistent timing, right? It's been very consistent. We've always kind of peaked around November, December. The last 3 major peaks. You look at 2021. You look at 2017 and 2013. They all were in November, December, basically October, November, December. So they've all been Q4. The last 3 major peaks of 3 cycles. Now, 3 data points is not really that significant, although it is one of the major patterns, you could say. And then we've always taken about a year to kind of get down to the bear market. A year to get down to the low during the bear market. So it's kind of like a year of capitulation to the ultimate floor. That's been so cyclical and so predictable timing wise, and I think. A lot of people, I've done some polls on my account and they've gotten a decent amount of votes, and it's about 50% of people. And every time I've done it, I do it every couple months. The number of people believe in the 4-year cycle is actually continually going down, which is interesting.
Yeah.
And so it was at one point like 70%. Now it's down around 50 or 40-ish. So yeah, I mean, I would say that if you're looking at through the 4-year lens, then a lot of people are thinking, okay, we're running out of time. Like, okay, Bitcoin has to make a move here. It has to happen now. And everyone thought, okay, it's going to happen October, November, and December here, October, November for sure. And that's what caused a lot of this leverage, is because everyone was on the same side thinking we're going up now. That's what's always happened. I think it's risky. I think personally speaking, I'm very much open to the cycle potentially extending. I think there's multiple reasons why that could occur. Some people will point to this when gold got its ETF, went on this huge run for multiple years. And again, I don't know, some people would probably have, nuance to speak to that, but there is that, that's what occurred with gold and just the price action we've seen in gold and silver. Gold and silver have performed so well as of recent. And so that's again why I think, this cycle has a good probability of extending, is just looking at gold and silver, kind of leading the charge and expecting Bitcoin, as far as a scarce asset. I mean, it should be performing similar or make up some of that ground as far as the ratios. And then macro, I'm not an expert on macro, of course, but macro with rate cuts and things like this, there's just multiple reasons why. And just the stability, and like you said, the amount of days we've traded over 100,000, the fact that the ETFs are showing pretty good inflows right now. The treasury companies are there's smaller ones maybe that aren't doing as well, but the majority of them are still a good vehicle to get more people into the space and into Bitcoin. So those are consistent bids. We see those announcements. So anyways, those are all my reasons. There's more I could think about, but those are kind of the main reasons why I do think. And historically speaking, Q1 has actually been pretty good for Bitcoin. I know a lot of people talk about Q4 being so good, but Q1's actually performed well historically for Bitcoin also.
I thought Q1, most bull markets ended in early January.
They
December.
have, yeah. But if you look at kind of like the means and the medians, Cena's done some work on this. Cena's on X. If you just type in Cena, he's done some work on this, and so is another account, Smithston. But basically, they've looked at different months of the year and essentially looked at the kind of mean and the median returns.
Oh, okay. You mean like through the cycle, not specifically just bull markets.
Yeah,
Okay.
just kind of looking at exactly. Yeah, looking at kind of every year and just taking in this month we were up 5%, 10%, and then averaging it all out. And not to like the biggest returns haven't been in those months, but they have actually been good. I think February has actually been one of the top 3 or 4 months for Bitcoin, surprisingly. So yeah, it's mostly the summers and September that Bitcoin has struggled historically. So yeah, I don't know how much weight I put in that. I do put some weight in that for sure, the seasonality component, and I think that'll actually become potentially a bigger player. And that's just traditional markets and adoption into kind of the mainstream players. They do follow somewhat of a cyclical cycle, go away in May or whatever. The whole idea of, the summer months and then coming back. And it makes sense because if people come back in September, say for the holidays or whatever, it takes them a month to kind of figure out what they're going to do. And then they allocate in October more. So it kind of does somewhat make sense anyways, but.
Yeah, I'm very much leaning towards the 4-year cycles had some value. I guess that was founded in mathematics, like supply and demand being cut. But like the halving now is just, it has meme value right now. Its mathematical significance on the supply side is really quite small now. I don't know that too many people are still holding on to that.
So yeah, I would wonder how many are. I mean, the 4-year cycle still has a good amount of traction for sure, it seems. But yeah, the specific drivers of the 4-year cycle, as far as the stock to flow idea, I think it was more. I would say yes, it could have been. So the halving could have been the driver or one of the main drivers during, say, the 2013 run, even the 2017 run. I do think definitely this run and even last run, it hasn't been as big a driver as people think. And yeah, I think at this point it's really not. It's a narrative for sure.
Yeah,
I do think there's a psychological factor. So one of the things that I definitely am interested to see, and it's probably playing out now, but it'll definitely play out in November, depending on what happens in December. There's a percentage of people that still believe in the 4-year cycle. So they're going to sell whatever percentage they've decided they're going to sell, like based on their strategy. I don't know, maybe they trade a percentage of their stack or whatever they decide to do. Everyone's different. There's probably a percentage of coins and sell pressure that's going to come on. And that might have already started. That probably has started. There's people trying to front run that idea, that narrative. So I would say we're already in that phase where there's people that are starting to sell because they believe in the 4-year cycle. Now, assuming that's the case, and collectively it could be a significant amount of coins coming back on, with the assumption they can get back in lower, which is the interesting thing. Because they're assuming, okay, the cycle's over, I'm gonna buy back in lower. Now, assuming that we don't end the cycle in Q4 and Q1 starts, whatever amount of coins have been sold, from those people that are believing the 4-year cycle, if the price doesn't collapse or if it recovers quickly, it'll be interesting to see how it plays out because you could see those people kind of FOMOing back in. being like, oh shoot, we're extending, right? So it works in both directions. It's definitely a headwind right now. I would say there's a headwind, which is the psychology around the 4-year cycle and people believing in it more than anything. But when we get through that, that's actually becomes a tailwind for Bitcoin, because now everyone's like, okay, this thing's going to extend. We don't know how long it's going to extend for. And then at that point, all bets are off because we're in uncharted territory. So that could make that's why I think if we can get through Q4, even if we don't have a crazy euphoric blow off top, right? Like we don't go to like 150 or 200. Say we just stay between 110 and 130 or 110 and 140 for the rest of the year. That's actually super bullish in my opinion, because that gets us through this narrative. And then at that point, everyone's going to want to be allocated, because if we, you don't understand what I'm saying? Like it becomes a tailwind in Q1 that could propel us, into a more extended cycle. I mean, yeah, I mean, it's, and there's a lot of obviously drivers like liquidity, global liquidity and things like this. But yeah, what are your thoughts around that? Like,
no, I agree with you. I think you've laid it out pretty well. The narrative friction of the 4-year cycle has some people thinking that they can, front run whatever may happen in late Q4 and maybe early Q1. But if we do break through that, we've just got just blue sky in front of us. Anything is possible after that. There's really nothing holding us back, and there's no sort of mimetic narrative about the 4-year cycle being over, so there's a bear market. If we keep holding through till March, April, then we could definitely look at another leg up for the rest of 2026. And in fact, that's when we get some fresh air and some new space for the entry of new memes. And that could well mean that, people start having a look at some other analogs. And one of the things I've been looking at is Amazon's performance for 20 years after the dot-com bubble. It was just basically a 20-year bull market and punctuated by numerous massive drawdowns that, kind of lend themselves to a comparison with Bitcoin. Bitcoin's going to have massive drawdowns, but within a range that constantly points up. It's okay, it may not last 20 years, but could it last 6, 7 years? That's certainly possible. We've already had 3. So who's to say it can't go for another 3? The business cycle is turning. The interest rates are falling. Liquidity is about to go up. Monetary debasement. We've just heard Treasury Secretary Scott Bessent call for Trump to have emergency powers to stabilize the economy in the case of a trade war with China. So we have all of these things as tailwinds. I don't see too many headwinds.
Yeah, that's the interesting thing, right? Like the only headwind, or one of the only headwinds, is this idea we have to go into a bear market in 2026. Like that's one of the only headwinds I see, is people being like, well, 2026 should be a bear market. It's like, but if
Why?
all the signs are pointing to, like, if there's all these other reasons, and this is the thing, right? Like, again, I put so much more weight in other patterns than the timing element, because as much as we talk about this 4-year cycle, and it's really ingrained in Bitcoiners, it is only 3 data points. Statistically speaking, especially when there's a phase shift in Bitcoin itself, and I think we've gone through that. I really do. I think we've crossed the chasm for Bitcoin, and yeah, I think, you get to a certain point, and yes, there's going to be pullbacks. Yes, there's going to be corrections. That's healthy and that's expected. But to think we have to go into an extended bear market and it's going to pull back, 70, 80%, I'm not convinced of that. I'm convinced of pullbacks, but we could be literally just staircase up for the next multiple years, and okay, yeah, maybe globally there'll be something that throws us for a loop at some point. But those events tend to be relatively short-lived. I mean, COVID, we bounced back extremely fast. This liquidation news, we bounced back extremely quickly. So I could see, some big wicks down, but then right back to kind of where we built stability. Mm-hmm. And then we just keep that climb going, and it's steady. It's not like a euphoric top. And that is a pattern change, because you got to think the first few cycles were massively retail driven. The first few cycles were low liquidity, and they were thin order books on these exchanges. And so the price, you could move it way faster, and there was a lot more volatility. And so that would, and plus the halving did play a big role back then. And so for all those reasons, I think that phase shift has occurred to the point where, yeah, I'm starting to be more and more in that direction. And I think the frustration of people this cycle, when they kind of realize that there's been that shift and they're not comparing to past cycles, they'll start to realize that this is actually in a lot of ways preferable. And yeah, like you said, looking at these other assets that go in these huge tears over a period of 5 or 10 years, I mean, why can't Bitcoin do that? The market cap's still only 2 trillion. It's still small considering the use case, global store of value and all the other use cases you go into. I mean, yeah, it's a good time to be in Bitcoin if you have that long-term perspective, and there's nothing crazy to panic about. And here's one other chart just on short-term, relatively shorter term stuff. So I just wanted to show this because this shows like the amount of profits, essentially unrealized profits people are sitting on right now.
Tell us the title of the chart.
Well, this is actually from Check on Chain. So this is actually Checkmate's website. I didn't create this chart. I just went to his site. But key cost basis. Are you looking at the same one? Key cost based models.
Yep.
Okay, perfect. Yeah. So I mean, you can kind of decide which ones you want to put on the chart here. So I just thought it was interesting to look at the short-term holder cost basis and the true market or true mean price. So short-term holder cost basis, for people that don't know, it's essentially the average cost basis. You could look at it as a weighted moving average, because if you're looking at, say, for an example, the 200-day moving average, what that does is simply take the last 200 days and just take the average price of the closes, but it doesn't factor in the volume. The interesting thing about the on-chain cost basis, they actually factor in volume. So the short-term holder cost basis is the last 155 days. So everyone that bought in the last 155 days, but it factors in the weight of the volume. So it is the cost basis of as close as they can get with on-chain, the true cost basis of short-term holders, which they categorize statistically as the last 155 days. So we're at that cost basis right now. We're probably a few K below it. So those short-term holders are not sitting in any kind of profits. Now, that's actually not a bad thing. You don't want to see us go too far below that short-term holder cost basis. And during a bull market, you want to see us stay above the short-term holder cost basis, but not too far above it. So the Goldilocks zone is basically above it, but not too far extended above it. Because if you get too far above it, there's an incentive for those short-term holders to take profits. If you get too far below it, then there's a risk those short-term holders are going to start capitulating, which happens during all the bear markets. And during the bear markets, if you look right over here, one of the characteristics of a bear market is you can't get above the short-term holder cost basis. So you go here, you get rejected, right? You try again, finally break through right here, right? That was a huge signal. And then, you find support. You do dip below it at times, but you don't want to go too far below it. So that's the short-term holder cost basis. Basically, right now, we're pretty much, there's no profits in aggregate. It's looking at all of them in combination, their cost basis. And then down here is actually an interesting one that a lot of people don't talk about. This is called true market mean.
That's the blue line you're pointing at.
The blue line.
Now.
Yeah,
Yep.
Exactly. Yeah. It's called true mean price. So this one is interesting. It's at 81,000 right now. And what it is it's the best estimation of the cost basis of the network. So the overall cost basis of all the coins that are active when you remove like lost coins and Satoshi's coins, because that throws off the cost basis. So if you remove the coins that'll probably never move, and there's different ways that Glassnode does this. They have their own, buckets they put things in. But their goal with this metric is essentially to say this is kind of like the cost basis of all Bitcoin holders that'll probably ever sell or have the opportunity to sell, removing, like I said, all those lost coins and Satoshi coins. So 81K, I mean, that, we're not that far above that, right? So there's definitely some profits in the market, of course, but it's nothing excessive. And, it's just an interesting level. That's essentially a level that, it gives you a sense of how extended we are. And we have gone below that, during bear markets, like it's happened, but it doesn't mean we have to go below it to the same extent we have in the past. If we don't have, especially if we don't have the upside euphoria, and that's the other thing. If we were to go in a bear market, say in the next few months, I think it'd be a pretty muted bear market because we never saw like that true blow off top. So maybe we don't go down nearly as far as we have in the past. That's another way to look at it. But anyways, I just thought these were both interesting just to understand, if you're in Bitcoin, okay, the average person that holds Bitcoin right now, their cost basis or what they bought it at on average when you put all the coins together is 81,000.
So Plan C, just touching on that point you made about a bear market, but a rather muted one. Like we could see a continuation of this entire 3-year pattern realistically in the next 3 months, Bitcoin pushing up to like 138, 145, and then draw down 30% from there, which would bring us pretty close to 100,000, right? And it would still be business as usual. It would still just be a repeat of what we saw earlier in 2025, this year.
Yeah, we spent a lot of time in that range. I don't know if you would remember, but yeah, pretty much. I think I can't remember the exact levels, but there was a lot of time we spent kind of between 50 and I want to say 60,000 or 65. Like there was a lot of days we kind of traded there, and then we just shot up. When the election and things happened.
It was about 9
Trump.
months.
Yeah, exactly. So initially, I thought that's where the bottom of the next bear market was going to be. I thought we were going to go all the way back to there because we were putting in a lot of support there and a lot of days trading kind of in that range. So I thought, okay, this could be the floor of the next bear market. I'm starting to think more and more that it's actually going to be close to 100K. Whenever that bear market comes, I'm starting to lean more and more towards the extended cycle idea. But just like you said, I mean, the amount of days in a row we've been above 100,000, the volume that's moved above it, the 1 year moving average being at 100,000 now, there's a lot of support there. I mean, maybe it's wishful thinking, but I just, depending on when we get there, say it's next year sometime, whatever we get to, it's possible that ends up being our floor because based on the amount of days, I'm focusing on like the actual amount of volume traded. There's kind of those two major zones, right? Or between like 100 and 120K, you could say. And between that 50 to 65 range or whatever, there's a lot of volume that move for an extended period of time in those two ranges. So I do think one of those will most likely be the next bear market bottom. Just my thoughts. Could be wrong on that, of course. But
don't you think that if we do push through and break down this 4-year cycle narrative, that without a blow off top, there is no bear market. It's just a continual wave of adoption that's punctuated by, pretty regular drawdowns that we've been accustomed to seeing, like, 20, 30, 40%, but no prolonged bear market. Like we're not going to be seeing a year of going down and then a year of recovery.
Yeah, exactly. No, I'm more in that camp. I really am. And I think more and more people are actually kind of going that direction kind of all the time, I would say.